Welcome back. You're with Breaking Market News, and we're going straight across to R. Chandrasekhar, President of Nasscom. Sir, thank you very much for joining us on NDTVProfit on a day when Nasscom has released its strategic review of FY 2016 and also shared its projections for FY 2017. It's hot off the press, which is why I'm going to toss the ball squarely in your court and ask you to run us through the highlights of what's come out in FY 2016.
I think very broadly what we are saying is that FY16 has seen a lot of turbulence in the global economy, both economic and political. We've seen impact of varying dimensions in different geographies, in different sectors. We've seen the impact in Europe, we've seen the impact in areas like the oil sector, like the telecom sector in Europe, for example. In the midst of all of this turbulence, the Indian IT industry as a whole has maintained a steady growth, and in the year which is coming to an end, we expect that it will close at 12.3% growth in constant currency terms, which would translate into 10.3% in terms of reported dollar currency. While at an overall level, the industry has maintained a steady growth and is on track to achieve our longer-term projections. Within that steady growth, there is a fair amount of churn in terms of which areas are growing, which areas have prospects, and what is the changing nature of the industry and the services that are being provided.
So I'm just going to step in there.
Just as an example.
Yes, I was just going to ask you that. Can you share an example of where the most painful churn is occurring and where the strongest prospects are?
Yeah, I think what we are seeing is that, for example, the most rapid growth has been in the engineering R&D segment, which has been growing at almost 12.6% in dollar terms in reported currency. We are seeing much faster growth, more than 1.5 times as high as the rest of the business in the area of digital technology. And that's a particularly good thing because, across the world, increasingly, the adoption of digital technologies is driving disruption. And the fact that the Indian industry is helping the corporate sector across the world to transform itself and to digitize at a more rapid pace augurs well for these opportunities. So in the midst of this turbulence, new opportunities are coming in different areas, in digitization and in sectors which are relatively new areas, healthcare, for example, education and so on, apart from the well-established areas like e-commerce and retail. So that's, I think, the good thing. We are also seeing that the number of digitally skilled employees has grown almost 8-fold over the last 5 years within the sector. And we've also seen that the digital revenues as a percentage of the overall revenues have gone up 3 times in the last 5 years.
Sure. But, I'm just going to come back to a point that has caught the interest of those who worry about the future of the Indian IT industry, as I'm sure, of course, Nasscom is keenly watching the numbers as well. You look at the 12.3% growth in constant currency terms, US dollar growth, you'll see, it's at the lower end of what you'd projected. And the worry is that, why is it at the lower end? Could this become a bit of a feature going forward? How would you respond to that?
I think the important point is that the fluctuations and the turbulence globally has been of such an extraordinary order that in the year gone by, that impact certainly on tech spending has been there. This has been seen from data put out by a number of international agencies which track these developments. And the fact that notwithstanding all of that, the growth rate has still been well within the band that we had projected, I think is a very positive sign. So I would not read that as being at the lower end of the band and therefore necessarily projecting that the growth has not been that good. On the contrary, I think the situation is the exact opposite, that in the midst of all of that, the growth has been stable. We had indicated at the time of bringing out the Nasscom McKinsey Perspective 2025 report that over the next 5 years, that is till 2020, we expect a growth of more or less in the range of around 11% to be maintained, which would take us to $250 billion by 2020 as an industry and $350 billion by 2025. The bottom line is, I think we are well on track with those numbers. Okay. And that's, I think, the broader message coming out of this review. Okay.
I was just going to ask that, would you say that you're pretty much on track? I know 2025 in the tech world is a lifetime away, but you're saying that $350 billion by 2025, the industry is on track to achieve that goal. Coming back to some of the themes that we were talking about, and I'm going to pick a couple of them, get your sense on, how these could play out. One, of course, is the Internet of Things with a specific application in the manufacturing arena. How much are industry insiders talking about that opportunity?
Well, I think that, the engineering R&D is the fastest growing within the various segments within the industry in comparison, for example, to the IT services and the BPM. So the engineering R&D growing at 12.6% is an indicator that the engineering segment is one in which the industry is poised to achieve more rapid growth going forward. We've also seen in the recent past, for example, when we had the visit of the German Chancellor Angela Merkel, that there was certainly an effort to build closer bridges between Germany's Industry 4.0 program, which is heavily dependent on digital technologies and much more closely integrating both the manufacturing and the customers into a connected ecosystem. And therefore, I think that the government's own program of Make in India, in which a lot of these technologies, design and engineering services would be required, actually, in fact, would imply that we need to really look at the strengths that we have in the IT sector, which are relevant for manufacturing, and leverage them within the country, just as people outside the country are leveraging them. Today, these companies provide these kind of engineering services and design services to really the front end or the leading companies across the world. So that is the strength which needs to be leveraged, for example, in Make in India as well.
Sure. Point taken. On to another theme, e-commerce playing out in a very vibrant way in the Indian marketplace. But again, is that worthy of special mention?
Yes, the e-commerce, I think, has been the bright spot within the domestic market. The domestic market, the e-commerce growth rate has been at 27%, which is far higher than the 10% or so in the rest of the market. Frankly, we had expected a slightly higher growth in the domestic market, excluding the e-commerce bit, but in practice it has been a little slower than what we were anticipating. We still remain very hopeful and optimistic. The enthusiasm level is also quite high, specifically because of a lot of government initiatives around Startup India, Stand Up India, Digital India, Smart Cities and so on. But what we are also seeing is that it is taking a little time for the momentum to build up. But I think the beginnings have been made, and therefore the outlook is certainly optimistic. But this is where what the numbers are telling us.
Okay, so I'm going to wrap up our conversation today on a slightly somber note, because I'm going to ask you to outline the challenges for the next year, and also ask you to rank where protectionism features in that list of challenges. It's a subject we've discussed before, but just in terms of, key challenges for the next year, where does the whole protectionism piece figure?
Yeah, I think the challenges going forward are many. The uncertainty and the turbulence, of course, is now a given. And we certainly expect that in the year going forward there would be turbulence which has to be factored in. So agility and adapting to these changes would be important. Market dynamics would be the growing trend of protectionism in many of the countries that we are seeing. We've seen what happened in the US, we are seeing what's happening in UK, and it's happening in some other countries as well. But I think while these do impose costs, these do alter the competitive dynamics, the essence of the issue is that these countries do face a shortage of skills, and many of these skills are not available or are in short supply, and the skills are changing very rapidly. All predictions, including a McKinsey study, show that the gap in the availability of skill sets is only going to increase, not decrease, with the passage of time. And therefore, for us, I think as an industry, the challenge will have to be on how do you actually rapidly skill your force? How do you ensure that they have the skills which are needed tomorrow, not only the skills which were needed yesterday. The good news also is that there are other geographies, for example in Asian region, where the same issues are being looked at far more progressively, and there have been consultations at an international level where we are looking at how do we ensure greater ease of access to such skills in this region. So hopefully as the pressures of economic slowdown compel economies and countries and companies to adopt digital technologies, adopt technology at a more rapid pace, the need for such services will only increase. And as long as we can keep pace as the youngest country with the youngest demographic profile, as long as we can keep pace with that rising demand for these skills, I think we should be well poised to take advantage of the opportunities going forward, notwithstanding many of these headwinds which we are facing.
Well, always an honest assessment of the realities on the ground. R. Chandrasekhar, President Nasscom, thank you very much for joining us this afternoon on NDTVProfit. Pleasure talking to you.
Thank you.
Thank you, sir. We're going to take a quick break. When we return, focus our attention back on the markets and the slightly wobbly form that they seem to find themselves in. 74.24 on the Nifty 50 right now. Key market analysis coming up.